Once Jerome Powell hinted at a possible 50 basis point rate hike in December, the dollar began to lose value across the board. As a result, the inverse correlation between the greenback and the oil helped the latter rise above $86 per barrel. At the same time, other factors, such as a potential output cuts by the OPEC Plus oil producer group, lower demand from China, and the European Union ban on Russian oil imports, remained intact, while a fresh news story just grabbed investors' attention. Notably, if Brussels fails to agree on the Russian oil price ceiling until Monday, panic will sweep the market, and in this case, energy prices will see an explosive rise at the beginning of the next week. Yesterday's rally was purely local in nature. In the short term, the situation still depends on the European Union. From a technical point of view, Brent crude oil kicked off the new trading day with a price gap, which enabled it to overcome the level of $86 per barrel. A full-fledged signal indicating a continued bullish run will be generated only after the price consolidates above $87. The volume of long positions will increase, thus pushing the quote up to the $90 mark. Alternatively, the benchmark may resume a downward move if it fills the price gap and fixes below 85. Jerome Powell's comments on the regulator's intention to slow down the pace of interest rate increases had a severe impact on the gold as well. The yellow metal came close to $1,800 per ounce. At the same time, its rally was also fueled by preliminary statistics on inflation in the euro area. Data showed that consumer price growth slowed down to 10%, beating analysts' forecasts. This means that the European Central Bank may also start tempering the pace of interest rate hikes soon. At the moment, all this contributes to higher gold prices. Thus, the metal may well exceed $1,800 per ounce in the near future. Meanwhile, the ruble was probably the only currency that ignored both inflation data in Europe and the Fed Chair Jerome Powell's statement. The dollar is still trading around 61 rubles. Obviously, traders are awaiting the final decision of the European Union on the Russian oil price ceiling. This will naturally lead to a weaker ruble. However, when market participants shift their focus to Russia's retaliatory measures, it will most likely recover. According to technical analysis, the situation has barely changed since last week. In fact, the dollar-ruble pair continues to trade sideways, just above the support level of 60. If the price stays firm above the 62 mark, the volume of long US dollar positions will increase. However, fundamental analysis experts predicted that the possible rise in the greenback to 65 rubles next week will be followed by its gradual return to the area of 60 rubles. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.